We'll take a look at what Tesla is going on right now and what investors like Kathy think about these projects. We'll also have a little profit projection that can probably help you decide on your next financial endeavors. So without further ado, let's get this video started. But before we do, make sure to hit like and subscribe to Tesla Stock News and their recent article about Tesla. Do you think Kathy's bullish opinions about Tesla are justified? Do you share her belief? The Cybertruck may become as popular as the Tesla model, according to a daring assertion made by ARK Invest. This revelation is very amazing and has created a lot of buzz. Let's examine this fascinating topic in more detail. Previously, automakers, analysts, and forecasting organizations believed that electric vehicles awards would only be a niche market. However, it now seems that they were also wrong about the potential of the Cybertruck. If Cybertrucks were to upend this profit center, traditional automakers might be in serious trouble. ARK Invest challenges these low expectations and draws attention to a blind spot in the industry. Many automakers currently finance the development and sales of unprofitable EVs using profits from their gas power truck sales. This is not just a possibility, it's a certainty. Still, there is hope for some automakers like General Motors, finally acting appropriately. If a little bit late, ARK Invest then goes back in time, showing how the U.S. Energy Information Administration predicted in 2014 that by 2040, long-range electric vehicles would have little to no market here in the U.S. One would think that the EMS have drastically altered their estimates, maybe expecting at least a 50 market share, but even that would still be regarded gloomy given how shockingly the market share of us EVs reached 5% just a year later. It's significant to remember that by 2030, 2035, and 2040. A number of states and regions across the world intend to outlaw the sale of vehicles with gas engines. Without a doubt, these elements would be taken into account while making projections. ARK Invest has been outspoken in its critique of the Energy Information Administration's forecast, even speculating that the intelligence to skepticism that underlies these forecasts about the EIA's capacity to foresee the future of electric vehicles has faded. Market ARK Invest emphasizes that the EV revolution is well underway because to the aspirational ambitions of legacy automakers such as Ford and General Motors. They stress how these established auto giants are making significant investments in electric cars, indicating a move in the direction of a more sustainable future. Such actions buy well. Known industry participants cast doubt on the idea that EV adoption is just a niched trend by highlighting the progressive business practices of organizations like Ford and GM. ARK Invest seeks to undermine the EA's estimate by arguing that their evaluations fall short of fully recognizing the potential and rapidly expanding market for electric vehicles. This criticism highlights their conviction that the future of transportation will be increasingly electric, as well as our confidence and the EPA broad acceptance of EVs. While GM intends to transition to all-electric vehicles by 2035, Ford anticipates 40 to 50% of its global car volume to be electric by 2030. Given that numerous states, including California, which alone accounts for roughly 13% of the U.S. market, want to outlaw the sale of gas-powered vehicles after 2035, I really doubt the data the EA is using. Despite my seeming displeasure, it becomes apparent that the EA's forecasts are inaccurate. These forecasts have rather thrilled me because they provide us investors a great chance. Although I don't think the EV acceptance rate will be as sluggish as the government agency predicts, fund managers and retail investors are also unaware of the facts, in addition to the government's intention for a slow adoption rate. I have to admit that not many people can be as misinformed as they are. It appears that they did not understand the idea of exponential growth, which is clear by looking at previous global trends. Furthermore, even though electric trucks are expected to have a market share of less than teen, the EA projects that trucks would make up 69% of all vehicles in the US by 2050. It appears that the Cybertruck might become as popular as the Tesla Model I. Now, I know that relying solely on Google Trends may not be the most reliable way to make accurate predictions, but hear me out. Kind of April 2, 2023. Just as Elon Musk tweeted about walking the Cybertruck production line, ARK Invest disagrees with this forecast and also mentioned that there are already 1.5 million reservations for the Cybertruck, adding to the potential success of electric trucks. Google searches for the Cybertruck outnumbered those for the model. Moreover, the majority of these searches came from truck, loving areas, which may indicate that people are interested in buying one. The map's intense red color denotes the concentration of searches in these particular places. In the end, the Cybertruck success will mostly depend on how much it costs. If it's too costly, sales may not be as strong, but if Tesla can provide a more reasonably priced version, sales may soar. Investment firm Arcane West continues to emphasize that although sell-side analysts may be uncomfortable projecting the electric vehicle market to develop at an exponential rate, it would be a mistake for them to overlook the possible consequences of the success of Cybertrucks for conventional manufacturers. ARK Invest estimates that, despite this statistic may appear optimistic, global EV adoption might reach 70 by 2027. It's not completely implausible. Experts are debating the quality of the Tesla Cybertruck based on a picture that has been making the rounds on Twitter. Though the Model I has emerged as the best-selling vehicle this year, we can reasonably assume that Tesla will maintain good quality standards moving forward. Any initial concerns about quality can likely be addressed and resolved. It is important to note that the Cybertruck is still in the prototype phase. Lately, when Cathie Wood spoke on Bloomberg about Tesla's emphasis on artificial intelligence, she brought up the network of autonomous taxis that Tesla is rumored to be developing. When it comes to proprietary data and actual driving miles, Tesla has a substantial edge over other auto and tech companies, not to mention the untested players in the Chinese market. Wood thinks there is a huge opportunity in the autonomous taxi platform with a business that can safely and quickly transport people from point A to point B, predicted to have a dominant market share in the US. Wood thinks Tesla will be that business, and by 2030, this potential may bring in trillions of dollars in revenue worldwide. For this reason, Wood and her colleagues are especially thrilled about Tesla's artificial intelligence breakthroughs and the company's growing production efficiency in both factories and automobiles. However, some people might think Cathie's enthusiasm for Tesla stock is excessively hopeful. Inspection. Her track record shows an incredible success rate, especially with Tesla. I completely concur with Cathie's points of view, especially her emphasis on how important fully autonomous driving technology will be for Tesla in the future. Although she is unable to increase her holdings once the stock crosses this threshold, Cathie's decision to hold on to her Tesla stock has proven beneficial and has yielded impressive returns thus far. If she had sold the stock each time it exceeded the 10 allocation limit, her performance over the last 5 years would have been significantly worse, possibly even negative 10. Cathie deserves recognition for her outstanding performance in the Tesla stock market. We saw potential in China's monetary and fiscal policies, which led us to invest significantly during the COVID-19 pandemic. However, since November 2020, the situation has drastically changed. Management teams have had to deal with severe restrictions and regulations. As a result, we have decided to significantly reduce our exposure in China. The concept of common prosperity has emerged, which implies lower profit margins and limited services that only reach your two cities. Though we still have some involvement with JD Logistics and JD, we have reduced our exposure until China opens up to international capital once more. As someone who loves Tesla stock, my only worry is that it may be exposed to the unstable US-China relationship in the short to medium term. However, I think this worry is mostly unfounded because over time, Tesla's strategy to diversify its operations and build gigafactories in multiple nations will gradually lessen China's importance. Furthermore, even in the worst case scenario, when tensions rise and trade barriers arise, Chinese companies will still be involved. May find it difficult to enter Western markets, and Tesla may have trouble selling in China given that country is anticipated to produce strong competitors in the long run. Nevertheless, these circumstances might not always be negative. Thank you for your time, and we'll see you in the future video. If you liked this content and supported us by subscribing and enjoying it.